Stablecoins are a type of cryptocurrency that are pegged to the value of a fiat currency, commodity, or other cryptocurrency. They are designed to reduce volatility and provide more stability to the market. In this video, we'll be discussing the pros and cons of stablecoins and whether or not they are a good investment option. One of the biggest pros of stablecoins is their stability. Because they are pegged to the value of a fiat currency, commodity, or other cryptocurrency, their value does not fluctuate as much as other cryptocurrencies. This makes them a more attractive option for those who want to invest in the cryptocurrency market but are hesitant to do so because of the volatility. Another pro of stablecoins is their utility. They can be used to store value, make payments, and participate in decentralized finance, DeFi, applications. They also provide an opportunity to move money between different blockchain networks with less volatility, making them an important tool in the DeFi ecosystem. One of the biggest cons of stablecoins is the potential for regulatory challenges. Stablecoins are a relatively new and rapidly evolving field, and governments around the world are still figuring out how to regulate them. This could lead to uncertainty and potential legal issues for investors. Another con is that the value of the stablecoin is only as stable as the underlying asset to which it is pegged. If the underlying asset experiences significant fluctuations, the value of the stablecoin will also be affected. Another important aspect to consider when investing in stablecoins is the transparency and security of the issuance and management of the stablecoin. It is important to ensure that the stablecoin is backed by a transparent and auditable reserve, and that the issuing entity has a solid reputation and is operating in a legal and compliant manner. Additionally, it is important to consider the type of stablecoin you are investing in. There are several different types of stablecoins, each with their own advantages and disadvantages. For example, some stablecoins are backed by a reserve of a single fiat currency, while others are backed by a basket of different assets. Some are also collateralized by other cryptocurrencies, like Bitcoin or Ethereum. Each type has its own set of risks and potential returns, so it's important to carefully evaluate which type of stablecoin aligns with your investment goals and risk tolerance. Another thing to consider is that the stablecoin market is still relatively new and evolving. This means that there are a lot of unknowns and uncertainties. There is a risk that the stablecoin you invest in may not be as stable or as widely adopted as you expect. As such, it is important to invest only what you can afford to lose and to keep an eye on the market developments. Overall, stablecoins can be a valuable addition to a diversified cryptocurrency portfolio, but it's important to do your research and invest wisely. It's also important to keep in mind that the market is highly unpredictable and even the most promising projects can experience setbacks, so it's important to keep an eye on the market developments and be prepared for the potential risks. In conclusion, stablecoins present both opportunities and challenges for investors. They offer stability and utility, but also regulatory and underlying asset risks. Before investing in stablecoins, it's important to conduct thorough research and due diligence, understand the underlying assets, and consult with a financial advisor. As always, it's important to only invest what you can afford to lose and to have a long-term investment strategy in place.